Investing's Monday Market Outlook. Matthew Buckley, the Chief Investment Strategist here at WCI. And market's grinding higher, folks. The trend is your friend, and a picture's worth 1,000 words. So there we go. There's the past 6 months of the S&P. Past 3 months, been on a tear as well. And then obviously the past 20 days, we've just been melting up and up and up. And you can't fight the trend. The trend's your friend, right? Any little pullback that we've seen recently just results in a stronger buy out of the market. Now, we're starting to get out of Q1 earnings season. Yeah, there's a bunch of retailers and some housing and some other consumer staples being reported this week. Best Buy, Walmart, AutoZone, let's see, HP, Target, Lowe's, Toll Brothers, Sears, Williams-Sonoma, Foot Locker. So we're going to maybe get a look into some housing and how the consumer is looking this week. But I got to tell you guys, based on the University of Michigan consumer sentiment numbers last week and some other numbers that came out, not going to see too many surprises at a lot of those consumer staples, folks. So I think we grind higher here. But we might start taking a pause. Why do I say that? Q1 earnings were tepid, folks. I mean, seriously, companies ran out to every microphone or press release they could find and say, hey, we're going to have a really bad quarter, and they lowered the net. Can't hit the ball over the net? Well, lower the net, right? So they ended up hitting the ball over the net. But cost cutting will only get you so far. Using laptops from 2006 only going to get you so far. And working your employees 80 hours a week is only going to get you so far. Economic growth is what's needed to get us out of this malaise. And we're really not seeing it. But again, folks, if you trade with me at WCI or Topkin Options, you know that the stock market and our economy are completely disconnected and not even in the same universe. So some of the economic events going on this week, really not too many market-moving events. Monday's a yawn. Tuesday's a yawn. Now, Wednesday, we have the FOMC minutes coming out, and the Bernanke is also testifying in front of Congress with his typical how goes it on the economy. So he might get hit with a couple left and right punches there, but nothing. He's not going to come out and say anything too crazy. Weekly unemployment claims on Thursday, flash manufacturing PMI and HPI and new home sales on Thursday, and then Friday some durable goods numbers as well. But folks, we just keep melting higher. However, I'm going to tell you, it's creepy. VIX closed on Friday down nearly 5% to 1245. Let's take a look at this, folks. I mean, whenever the VIX gets to this level, and my traders know when I say this to perk up in their seats, this is nuts. The VIX is at a level where I look around, as other professional traders do, and say, yeah, this is nuts. Something's creepy is going to happen. Let's take a look at a 3-month chart of the VIX to show what I mean. Okay, let me get rid of this drawing real quick. So back in March, creep out, and then everything's back to normal. Whoop, another creep out, and then kind of back to normal. Creep out, really back to normal. Creep out, back to normal for a little bit, and then another creep out. So the VIX, folks, it tends to revert to its mean, and this 1312.5 on the VIX really seems to be the no lower than on the VIX. When it gets this low, everybody looks around and says, yeah, we don't believe this either, so let's go get some protection. And something scares the market. So actually in this portfolio that you're looking right here, I have a bullish double vertical on the VIX right here that's designed to profit. It's up nearly $1,200 with a potential freak out moment, okay? Because I can tell you, and it's a June trade. It's a bullish double vertical on volatility because just unless something, unless the second coming happens between now and June VIX expiration, something's going to creep the market out. Okay, and we're going to see one of these spikes up into the upper teens. We get a nice violent move in that direction, and this VIX bullish double vertical that I have in the primary live trade brief model portfolio is going to look pretty sweet. Also want to share with you, as you guys know, if you've been following these Monday market outlooks, my sit reps over at Topkin Options, or my Friday market wrap-up, you know that a month ago, literally a month ago, I think it was April 19th, I put on this trade, a synthetic stock position on the EWJ. That's the Japan ETF, right? It's up nearly $7,700, or that's nearly 500%, 478% trade in a month on the EWJ. Why? As I said, the trend's your friend. Let's take a look at this. Anybody see a trend? And you can copy paste right on top of our market. So when the Bank of Japan said, you know what, if the Fed can print themselves out of their mess and prop their market up, that's what we're going to do. And the yen collapsed and the market's taken off. If I didn't have this trade in my model portfolio, I would add it today. And we'll talk about this Tuesday morning at 0900 in our primary live trade brief. But for the past, ever since I took a look at this trade and added it to the primary live trade model portfolio, it's just it's kept going, and I'd still add it today into my primary live trade model portfolio if I didn't have it on right now. A lot of good stuff going on in the primary live trade brief model portfolio, and I really think that we're just going to melt up from here. Not too many places to go. As you can see, year to date, we're getting kicked in the teeth with gold. I have a lot of gold positions on, and these are a lot of long call diagonals. Long-term bullish on gold, short-term bearish, and I'm long-term bullish on gold. It's a flight to safety. God forbid Syria, Israel, Iran, something creeps out the world. Gold's going to be the safe haven. Not seeing too many signs of inflation right now, and with equities rising, no inflation, people are dropping gold like a bad prom date, and that's why our biggest position, losing position in the primary live trade brief model portfolio is on the GLD. Okay, I got to run. Happy hunting. Make sure you hedge, and I'll be back Tuesday morning with our sit rep over at Top Gun Options. We'll see you.